What's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. As you could see, you know what? Let me get a little music going. Let's go. Hey. See if I can turn this down a little bit. Hey, as you guys can see, we got Stock Mo, we got Keenan Grace, and we got Stocks with Josh in the house. Let's see some coffee cups going up right now for the family, for the core four. We're going to get right into it. All right. So, hey, we're going to keep this one moving. Let's get some short intros from everybody, starting with you, Stock Mo.
Man, I got to tell you, Larry, you're bringing the heat. You're stepping it up a notch. You got the music in there. I got to tell you, it gets the juices flowing. I'm happy to be back. Thank you, my friend, for having me here. Having the core four back together, it doesn't get any better than this. And after Jay Pell came out and gave us a big turd sandwich with a little bit of sugar and some rotten whipped cream on it, this is going to be a fun day to talk about.
All right. My man, Keenan Grace, hit him with the bop, bop, bop.
What's going on, everybody? You already know what time it is. Remember, proper preparation prevents poor performance. Say it with me again. Proper preparation prevents poor performance. That are the 5 Ps. We have to remember that. We have to be prepared, not surprised. Now, that's how we're going to make money in the stock market, because remember this. Good companies, when they come down to prices that we like, that's when we like to buy them. There are going to be a lot of people get scared out of the market when the time comes, when it's actually the best time to buy, when the market is down. Not that that's right now, but you want to pay attention so you can have an understanding of when we start to bottom out.
Stocks with Josh. What you got for us?
Hey guys. Well, thank you, Larry, for having me on. I'm excited about this conversation tonight. I enjoy having these talks after the Fed does his thing. The Fed obviously talked too much today.
Yes.
Larry and I were chatting a moment ago that, one of these last questions that he was given, the same question over and over again, all of a sudden he started to turn the ship a little bit more hawkish, and I was sitting there yelling at the computer saying, stop asking this man questions. But, I think, like Keenan said, man, I mean, we're prepared right now. This is going to be a dynamic hour. I'm excited about breaking out some answers to these questions, Larry.
That's it. Hey, we're going to keep it moving tonight. Hey, thank you, Rosa. We're going to keep it moving tonight. We're going to talk a little bit and we're going to answer a few questions. Hey, Mo, what did you think about the 25 basis points? I expected it. What did you expect?
Absolutely. You can see it priced in there. It was wild. Like Josh said, man, it was like, shut up, Jay Pal. But for me, for those following my channel now, you guys know, I hate to say it, but I'm a bear now. And I'll come out and say it. I'm putting that hat on. I'm inverse. Not only am I a bear, I'm triple leverage, baby. I'm going all in. We're playing that downturn because I was expecting Jay Powell to come in and just fart in the elevator. It wasn't going to be pretty. It was going to be bad. And it was. This man went in and was able to take something that could have been a real positive in the markets. Hey, this is the last rate hike. We are now seeing that we could be able to hold. He didn't do that. He came in and stunk up the joint. He kept talking. So when Josh was screaming, stop, I was screaming, keep going, Jay Powell. You're going to ruin everything. And here we are. And my inverse plays made bank. Over at the Discord and the Patreon, we were laughing and loving it. Every time a word comes out, you can see it ticking down. Now, here's the thing. You got the debt cycle coming, the debt crisis. You got Jay Powell keep yapping. And at the end of the day, it's a perfect combination of a big turd Sunday. It's dessert, folks. I'm going to tell you something. I know everybody wants the next bull cycle to start. And there was something I talked to Larry and Keenan and Josh before this, that it's hard. Now I'm going to get serious with you. For everybody watching, when you look at the forward PE of the S&P 500 next year, over the next 12 months, we're looking at around 19 right now, roughly 19. That tells us we are going to get a little over 5% on our money. That's how that works. If that's the case, and we look at the bonds, say single A, triple B, they're good, solid corporate bonds. You could get over 5%, 5.3, 5.4. Then you look at the treasuries, the 6 months paying over 5% risk-free. Why would anybody go in the stock market with the valuations as high as they are and not go to basically risk-free or near low risk and get the same thing you can expect out of the stock market. That is the thing I don't think a lot of investors understand.
Mo, I want to come
What's
back
up?
to you and I want to talk about bonds, and I want to talk about some of your triple leverage plays. Okay, we're gonna stick a pin in
Yeah,
that because
we'll
I
come
want
back.
you to dig.
Yeah,
I
yeah,
want
yeah.
you to dig a little deeper and educate the family, right?
Yep, absolutely.
Josh, what do you think about the interest rate hike? Was it expected? Was it a surprise?
I agree with something that Mo said a moment ago. He said that it largely looked priced in for the most part. I don't think, even though we did have some movement, it was not dramatic. Matter of fact, I kind of immediately shifted my attention to Apple's earnings tomorrow for more confirmation of direction for the market. So it does appear that to some extent, I agree with Mo, it was priced in. He did imply that this might be it. It reminded me right away that Goldman Sachs, their annual year in review and forward guidance for the year, they said that the Fed would be done at 5.25. And it looks, lo and behold, it seems that could happen. Of course, I've got a lot of thoughts about how this is seriously going to impact the banks. I did a video Thursday warning everybody that First Republic was done Friday. And I said to him, I said, you get whatever money out of it you can. By Friday, it was free falling. Monday, it was over. And of course, now we're seeing a couple other big banks drop. West Bank, I forget the names of them.
PacWest.
Yeah,
PacWest is down
PacWest.
almost 50% after hours.
Yeah,
It's more than 50% right now.
Yeah, so the banks are in
you're
free
kidding me.
fall. Yeah, the banks are in free fall. I warned everybody that it wasn't just First Republic, that KER, the regional bank ETF, was looking just as sad. It dropped an additional 10%, probably lower this evening. So yeah, I think that Mo's bearish. I have some interesting, challenging ideas to that. Okay, I want to I
got to tell you, Josh,
I'll
just
do
to
this.
jump in. I was just going to say, jumping in, a lot of people were looking at doing the put options on these banks. And that's why I'm upset, is because there was an opportunity. These options were trading very cheaply. And you could see the danger of PacWest being the next domino to fall. And man, we were looking at it Monday. Did not pull the trigger on this one. So a little shocked.
I did.
Yeah.
Not on the banks,
Did you?
though.
There
so
it
I got
is.
into a put option.
Go ahead,
put
Keenan.
option.
No, this is the one.
Killed it.
Go ahead.
Let me tell you, man. So on the live stream that I was doing, this was on Tuesday, right? This is right before the market just dropped when Yellen said that, oh man, the debt ceiling thing, right? How they're gonna run out of money by June 1st. So I'm sitting on a live stream, and this is why I tell everybody this, right? To a hammer, every problem looks like a nail, right? What that means is, imagine that you're a hammer, this is your only tool, and you just bang away at every single nail that you see. But you got to remember, you got to have a toolbox, not just one single tool. So you need, let's say on the stock market, you need a hammer, but you also need a screwdriver. Screwdriver takes a little more skill to use than a hammer, because you're not just banging with it, right? So then I say, my hammer is my technical analysis. Most of the time, I'm just gonna be able to whack, boom, and then it'll just work. Let's say 70% of the time. The other 30%, that's my screwdriver. That's that news catalyst stuff, where no matter what the technicals say, if something crazy happens in the news, then about, let's call it 30% of the time, you got to use your other tools. So we're looking at this, we're looking at the charts, and the charts are saying that, man, the market is basically bottoming out, at least on a short time frame. But then as soon as Janet Yellen started saying stuff about the debt ceiling, I'm like, oh man, this market ain't bottom out. We about to tank. So then I'm using that screwdriver. We jump into some put options. I had looked at 2 put options. One of them was 0 days to expire. Extremely high risk if you don't know what you're doing. The other one was a month out. Still high risk because it's an option. So I'm on the live stream. I'm like, hey guys, basically either one of these, the way that it's looking, it's gonna be good. I went with the one that was a month out to give myself some time. In, I want to say 10 minutes, the thing was up 40%. The one that I didn't get, but a few people that were watching the live stream showed me screenshots. They jumped in. It was up 400%. But guess what? I say, look, whether you make 40%, 400%, 10%, most people are losing money because the market is going down because they have not yet acquired the skill that pays the bills to learn how to make money on the way down.
Mm-hmm.
Now, when you look at these hedge funds, and they're called hedge funds for a
Keenan,
reason, they're hedging
Keenan,
against
how
the
could
law.
how could they
make
learn
money on
some
the
of
way
these
down.
skills? How could they learn some of these skills?
How can they learn it?
Yes.
So you can learn some of these skills by, first of all, this. And because I just got to say this straight off. I had a lot of people join into the Discord recently to try to take some of my classes to actually learn how to do it at their own pace and watch me trade on the live. But I want to say this. If you are not serious about learning, it's not the place for you. It's not the place for you. Because again, I'd rather have a small group of people who are very serious and are trying to learn these skills rather than people who are just trying to get rich. So that's way more important to me, because I want to teach you how to fish and not just be just giving you fish and giving you fish. I want you to be independent. Oftentimes you live in a world where we got the big pharmaceutical companies, we got the big tech stocks, we got the oil companies, and what they want to do is make you perpetually dependent on them. I want to actually do the actual reverse and make you independent so that you can say, you know what, Keenan, I appreciate you. You helped me to learn something, but now that I learned it, I can go and even move on and then go teach it to somebody else. That's what I want for you to be independent, because all of the things that I know about options and the stock market and everything, you think I was born like that? No, I put in the time. People put the time into me, and I was like a sponge. I was just ready to absorb it. And I wanted to go and learn for myself, so then I could be in a position where I could speak on it intelligently and actually say, yo, I see a crazy news catalyst about to happen with this debt ceiling stuff. Got into a put option, boom, made 40%. I don't know how many posts I seen on Twitter, people crying, oh, my savings, my shares, my stocks. I got in First Public Bank stock. Why did you get into the stock and not the put options? Right.
Let me before we keep going.
Stevie Wonder could have seen that one with Ray Charles pointing it out.
Come on, Keenan.
That it was good. Come on now.
I heard that somewhere before.
There you go.
So we gotta just think, and we gotta pay attention and say, hey, there's so much money to be made on the way down, and we could clearly see where the market is headed now. Nothing's guaranteed, but you got to be able to identify these things, and you don't have to always just wait and say, all right, look, I'm just gonna wait and watch my portfolio go to zero. No, you could say, I'm gonna learn how to make money towards the downside and then eat off of that. That's what I got for you.
Josh, I want you to finish your train of thought, what you were about to say.
Yeah, okay, let me get this thought out there. I'd like to say that the only thing that I actually bought today was actually a little bit of an increase in my SQQQ position. I took a starter position when it went to $28 range. I added to it around $29.50, $29.60 today. That's the only thing I added. Now, having said that, I don't believe that we are in a confirmed bearish move yet. And the biggest question, or the biggest fake out that we might get, would be to have a slight pullback and then continue the trend forward. Now, here is why that might happen. The Fed has signaled a little bit of a willingness to pivot, but the bigger issue is that the very minute that we get more of this bank crisis, we're going to get more stimulus, more printing by the Fed, and that simply is good for stocks. And so here's what I think is going to fake out a lot of retail investors. It's going to begin to fall. They're going to make some money on their SQQQ. They're not going to lock in their profits. And then we're going to continue potentially this trend a little higher. I'm looking at a Gaussian channel on the S&P 500. Now we are getting very close. For us to actually hit it, we would have to go up about another 100 points, the very top. And I think that it's come this far, likely will hit that top and then get rejected and go back to the bottom of the channel. It typically makes a full move from bottom to top. And so here's the main takeaway. If we get that turnaround and we start going south, it might not be the big leg down, not unless we see some massive bank failures. And even then, if the bank failures start rolling in and the Fed responds with a quickness to print, then the markets are going to they're going to go not with the negative, they're going to go with the fact that money's coming in and the Fed's being responsive to it. So I just think that I'm still viewing the bigger move down in the market potentially later. I'd love to hear your guys' thoughts. That's my overview.
Okay, so this is what we're going to do. I got I got some major questions that I want to ask each of you specifically. But let me say this first, right? Now, you guys know I've been short term, look at the market for what it is, but long term, I'm bearish. I'm extremely bearish long term and have been trading accordingly. Look at this, good people. That's Pac West. I don't know why is it shifted to the left there, but Pac West, as you could see, is down 44% after market, right? Look at that. And in the last 5 days, it is down 23%. Plus it's ridiculous. In the last month, it's just tanking. It's just tanking. Just a straight tank, right? And so I gave you guys the play last Friday with First Republic. Last Friday, if you remember, if you heard me, leave me a coffee cup. I told you it's going to run up to earnings, right? I said it Friday. And then Monday, we did calls. And then I said it's going to sell off right after the earnings, right? And it did just that and tanked. And I also said it's not the last one. There's another shoe to fall. Well, Pac West is it now, right? And it cannot be contained. And what exposed this is the interest rate hikes. This just happened after hours, right? They put out their statement after hours. Why did they wait till after hours? It was after the Fed spoke and after the Fed went up another 25 basis points. This is not anything for us to be fearful of. These are opportunities, okay? Let's go over some of the stuff the Fed said. The Fed said that it's data dependent, right? So he wouldn't say that he was going to go up another 25 basis points. He said the labor market remains tight. Unemployment rate remains very low. And he says wage growth has slightly eased, okay? But he wouldn't come out and say it like he used to say, hey, we're going up. We're still going to go up next month. He wouldn't say it, right? So he's leaving room for whatever, right? And he was nervous. If you read his body language as he stood at the podium, he was way more nervous than he normally is, okay? I want one of you guys to chime in and come behind that. And then I'm going to ask, what I'm going to do is I have 4 questions. I'm going to ask you guys a question, and then we're going to go and answer the family's question. Then I'm going to ask another question, and then we're going to ask the family. Matter of fact, let's do that now. Let's do it right now. All right. You know what? Let's start with you, Josh. Josh, is big tech too big?
I'm going to throw out a bunch of thoughts on this. One, I've got great interest. Keenan mentioned it in our last live. He talked about AI. He kind of went into, shared that he'd been diving into it. And, and I noticed something today. We actually had our very first company in their earnings actually say that AI was crushing their business. Chegg, I believe, is the company, and the stock dropped exponentially afterwards. I sent out a warning to folks in my chat group on Tall Education, which is a company that I was bullish on. They do education for kids after school in China. One of the biggest companies. The stock had dropped way down to its lows, and after the country began to open back up, it began to pop, and I was in it. But I sent out a warning to everybody. I said, Tall is going to be in this group of companies that's going to suffer through AI. So why am I talking about AI when you ask me about big tech? This is an unresolved battle. The previous moats that big tech had around their castles have essentially been drained by AI. The alligators have been shot with the AI arrows, and the castles are under siege. And and right now we've seen big tech unproportionately push the markets higher. So it's FANG, it's all the big tech companies in the S&P 500. They've pushed it higher. They're up around 30%. But if you minus them out, the S&P 500 is actually only up, I believe. I forget the numbers. It's around 2 or 4%. The Dow obviously only has Apple in it, and it's up only 2%, whereas the S&P 500 is pushed up much higher. So yes, big tech has disproportionately been on a long run that began, a lot of it began in January, some of it began in December. And the fact is that they're all at the tippy top of their range. And I've been given some clear warnings. I think it's all going to come to a head tomorrow with Apple. I think that's going to be a big deciding factor for how the market moves forward. And Apple's, I told everybody, if this sells back beneath 168 bucks, then that's going to send us a bearish message before earnings, and it did do that. So it's going to be volatile. Wouldn't shock me if it shot up $5, but ultimately I think it's at the top of the range. I think, just to answer your question concisely, Larry, big tech is way overblown right now. It's under the threat of AI. We're beginning to see the cracks in the wall on companies. A lot of companies said it's not going to affect them, but it is. And some of the, Microsoft is probably one that's doing pretty well with AI. Everyone has doing something. Amazon's, is trying to integrate AI with their AWS, but we need to see how this plays out over the next couple quarters, because these guys might be way overpriced right now.
All right, Josh, while you're there, I need you to answer this question. Hey, Stock Up with Larry Jones. What does Josh think about SCHW versus SOFI? I forget the name of this company. Everybody is into this company because of their dividends, but answer that question, please.
Well, I did a video. Today's video is a complete breakdown of my thoughts on SoFi. And more or less, if I get to the heart of that video, it's that the uncalculated risk of bonds in the banking system, the bonds that have unrealized losses, the coming credit crunch is not going to allow these pre-profit companies to be able to not dilute. They're going to have to dilute to survive. And every single time they dilute in this environment, and for this reason, the stock price has to come down to calculate that dilution. And so the bottom is not in. That's my view on it.
All right, Keenan. Keenan, you are up next, Keenan. Keenan, I'm going to ask you, do you find that more people are shorting the market with options? What do you see in the options area?
To be honest, I'm surprised I don't see more of it. So far, when you look at the options chain and you look at even the VIX, for example, which tracks the applied volatility, it's not as intense as it is going to be right now. It's kind of in a weird space where what everyone is doing is they're kind of watching to see, is the market going to start to fall? Because what happens a lot of the time is people are a day late and a dollar short. There are the early adopters, or the people in this case who are the first people to say, all right, look, I'm ready to jump on the put options right now. Then they're going to be the institutions after that. But then the institutions actually cause a self-fulfilling prophecy. When they start to sell and they start to buy the put options, you start to see the VIX get crazy high. Then retail investors are to follow after that. So we haven't even gotten to the point where you're starting to see a large flood of the put options, or even people selling call options where they're basically betting that the market is going to go down. I wanted to touch on real quick on something that Josh was talking about big tech. It does seem like it's close to being at a head. And we're looking at the companies who are telling us almost indirectly that hard times are ahead. For example, Amazon, since about 2022, they cut almost 30,000 jobs. Meta, 20,000 jobs. Google, 10,000. Microsoft, 10,000. Salesforce, 7,000. Twitter, 6,000, but that was more so Elon Musk. But a lot of the big tech companies are just saying, look, it's not just the stock price moving. It's the business. It's the company. In order to keep our numbers, our bottom line making sense and keeping us profitable, we got to cut a lot of the fat, a whole lot of the fat. So now when I think about this and I see this, it tells me that there's a lot of things that they know coming forward that they don't necessarily have to say. And I was watching Josh's video and I was cracking up watching it, right? This was like maybe 2 days ago, maybe even a week ago. I forget exactly the date. So I had made a video about Amazon, and I was talking about, how they had their earnings and everything going on like that, and how they actually did better than a lot of people expected, even analysts expected. But after the freaking earnings call, the CFO, this guy, he starts talking about stuff out in the future. Remember, the earnings was about quarter 1, January, February, March. What happened, right? He starts saying,
one job.
In the future, though, it's looking like the cloud service isn't going to be doing as hot. And the stock, it shot up. As soon as he said that, it crashed and gave back all of those gains. And I was just thinking to myself, man, what a career blunder. This dude blew it. And then Josh, I'm watching the video, and Josh is like, yeah, I'd hate to be that guy. I'll just crack it up. So
Yep.
like,
Hey, Keenan,
what,
can you answer
what
this?
the heck was that?
Can you answer this question, Keenan? What do you guys think about Mullen? Go ahead and answer that question. I've answered that question 1,000,001 times. Tell me, tell them what you think about Mullen.
I'm so glad that you asked me this, right? So there's someone in your comments, and again, no disrespect, but I gotta, one thing that I do when I get comments that I feel like are out of bounds, I say I gotta punch you in the chest just to teach you something real quick. So the comment is this. This is from Linda Wilder.
Yes.
Now, Linda, no disrespect. I don't know you. You don't know me, but I'm telling you this out of love. She says, and everybody pay close attention. Put on my Linda voice. Just tuned in. I cannot believe you are giving Keenan clout. He is a clickbaiter, in my opinion. He likes to pump China stocks. She didn't write stocks. She wrote stocks, but I think she meant stocks, which I am against. Calls people his family. So then I'm thinking to myself, okay, what's going on here? It's giving the same kind of energy that you would hear with something like Mullen. If you ever hear Keenan Grace, Larry Jones, Stock Mo, Stocks with Josh, me, Kevin, Graham, Stefan, Andrew, Jake, whoever, giving you research on a particular stock, they giving you research. They telling you this is what's going on with the company. This company is not profitable. If you take any investment into this company, you know you could probably take some sort of a risk here. With China and the United States, there's some tension. So it's not going to be moving like a regular stock. Don't put your entire portfolio into something like this if you decide to do it. And then you go out and you follow half of the play. If we're in a huddle and we're calling out a play, and then you go and run it a different way, who's doing something off in this situation? Now, this isn't to blame you or put any blame anywhere, but I want you to think about these things. If you ever hear Larry Jones talking about something like Mullen, and he's telling you, hey, guys, you know what? This is hypothetical. I bought it here. I'm going to sell it here. And then he buys it here. He sells it there, whether it be a profit or a loss. And then you come back a month later. You come back 2 months later because you haven't been keeping up with the videos. You haven't been keeping up with the plays. And now you're like, oh, man, I bought Mullen and then I went to work, never opened my account again. What's going on? It's down. What happened? You got to take some personal responsibility and accountability. So this is me saying I gotta just punch you in the chest. And this is out of love because I want you to succeed. And I want you to understand that there's a lot of people on the internet who will try to lead you wrong. But when you find people who are trying to help you and keep it real with you, like I'm talking to you like as if I'm talking to somebody I actually love, you got to take responsibility and say, before I even get into this, yeah, I heard Keenan talk about it. Yeah, I heard Josh, Larry, Mo talk about it. What are they even really talking about? Are they saying that this is something that I need to go buy up like Apple? I keep hearing Josh say Apple. He's saying Apple. He's saying Apple. I'm going to go and buy Apple. But then you play the video back and he keeps telling you that Apple is at a peak. At what point are you going to take in the whole piece of information? So again, nobody's above any criticism. I'm human. I'm going to make mistakes. We all going to make mistakes, right? But what you got to do is then go and learn from your mistakes so you don't keep repeating it. So then we get into a situation like a Mullen, for example. Mullen is in the past and is gone. If you love Mullen to death, hey, you do what you do. Maybe it go up 1,000% tomorrow. That's going to be great. But I don't see it. I don't even care. To be honest, I don't even look at Mullen because for what? It wasn't a profitable company then. It's not a profitable company now. So we look at it like a trade. And I say this, trades, get in, get up, get out. People forget the get out part. Somebody told me just recently that they bought First Financial at $14. I want to say in this like last 2 months or so, it peaked at like 16. He bought it at 14. Last time I checked, it was like $1, if not 30 cents or something crazy. And I'm thinking to myself, where was your plan? Where was your plan? If it went to 14,
said get out of it. I said short it. Everybody, and then people are still purchasing. Hey, you know what? Haters gonna hate. That's what they do, man. We got to do like this. To
be honest with you, I don't even want to just take it as hate. This is why I say I'm gonna give you a punch in the chest because I don't even want to just take it as hate. I want to take it as a misunderstanding that you are having. That I'm gonna take the time and love on you and try to help you to clear it up so it don't happen to you again. Look, me,
Right.
Larry, Mo, Josh, we not as big of a YouTuber as somebody like, let's call it me, Kevin. If we see me, Kevin, talking about some, I don't know, he talking about Chegg stock, right? He talking about Chegg, like Josh just say, he talking about Chegg, for example. And we say, okay, he's talking about Chegg. He's saying that he thinks it's going to go down because of the AI. And do we just go and say, okay, cool, we just going to go put money in that? What if I was to put all of my money into something because I heard somebody say it and I don't do any research? I just decided to put all my money in it. And then I go back after I put my money in and he's saying that, oh, it's going to drop. I shouldn't be shocked here. I put money in it. I should know what's going on. I should know what's going on because you spend your hard-earned money on these stocks. You got to have a foundation. And like I always say, if you can't handle the heat, it's because your foundation is weak. You don't have any ETFs. You don't have any index funds. You got into the game and somebody said this, right? This is one of the examples that I first learned. What people do is this. They got into the game, they first get in and they going and buying and listen to me here. They say, yo, Keenan, I picked up $1,000 a Dodge coin. I picked up $1,000 of Doggy coin. And I'm thinking to myself, you don't even know how to say it and you bought it? It's Dogecoin. I know you didn't do any research, right? But you put the money in because you are in this instant gratification mindset.
Man, you made a point there, Keenan.
That's going to put you in a situation where you are actually going to lose. And you are going to keep losing until you get yourself out of it. So I just wanted to take that second and just love on you in a way and tell you what you need to hear instead of what you just want to hear.
You know what, Keenan? I'm just going to intertwine. It's just some people, and I'm going to just say this, and the rest of the family, you know this. You know it's true. Some people you just can't help. And I'm not talking about whoever made this comment. Some people you just can't help. And you just got to keep moving because the family, I'm going to tell you, man, with this last interest rate hike, it just got real. When a bank gets taken over and they literally change the rules, I hope you guys see what I see. They changed the rules so JP Morgan can buy this bank.
Crazy.
They literally, so JP Morgan cuts the deal with the government. And so now they have a monopoly going on. Where do you think most of the jobs are created? Where do you think they get their money from? The regional banks. Big banks mostly lend to big businesses. Who do you think employs most of us that's listening right now? Small companies. I'm telling you guys, it's as clear as day to me. And so we can't help everybody. And if some knucklehead makes some video and say, oh, Keenan talked about this, and then they go back and Keenan talked about it last year. Keenan got in, made money and got out. It's later for that, man. We giant slayers. We ain't got time to be flicking ants. We giant slayers, right? So I'm gonna keep it moving. Hey, let's just keep it moving, man, because we got to help the people that really want help. Hey, thanks. You got the class. Hey, I'm trying to hold as long as I can. Mo, let's get to you, man. And then Mo, when we finish with you, I want you to answer a question for me, all right? So all of these guys, I'm gonna do a station break before you come up, Mo. I want everybody to check out the links below. And the 3 links I'm talking about before I talk about Mumu or my class, the 3 links I'm talking about below is the link to Stocks with Josh's page, the links to the gentleman that's up right now, Stock Mo's page, and the link to Keenan's Grace's page. I will tell you that the more people you listen to, the more you will learn, right? We're all great, but we are stronger individually in different areas. And then we come together as the core 4, all right? But we are stronger. We will strengthen you in different areas, okay? So let the negativity walk. Hey, Mo, I want to ask you, because you've been dead on about the bonds, man. Your timing with bonds has been one of the best, actually. And I'm just going to say it. A lot of YouTubers, you were one of the first that was talking about it. You didn't just start talking about bonds this year.
The first.
Enlighten people on bonds and what you're doing with the triple leverage, and then I want you to find a comment and answer the comment. Okay, so we want to talk, but we want to answer the people's questions.
Yeah, I'll start with This is part Keenan here. This is to help Keenan out, but it looks like OJM saying about being a financial advisor. None of you a financial advisor. This is from Keenan and me. Bop, bop, bop. Right there, old Testicat for you. All right. One thing. One, I was a financial advisor for one of the largest financial advising firms in this country. All right. Know what you're saying before you say it. Then you might say, well, what'd you do afterwards? Well, I just a couple of months ago for kicks and giggles, I went out and passed my Series 65 again. No, I might not be licensed, but hey, I wanted to show my qualifications. Easy out there, OJM. Some, just so you know, we as a core four do take it very serious and continue our research, our studying. I don't think anybody puts more time in than us four in doing our research and trying to bring it to the family. Say what you want, but at least understand what you're saying and just don't say things that aren't true. That's to that one. And that bop, bop, bop. I love that, Keenan, just so you know. Now, getting back into it. The bonds. And people ask about the markets and technicals and the fundamentals. I will say this. I watch one person for technicals, and it's Josh. Josh is by far the best by any means in technical trading.
He's the man.
And no one's going to hit 100%. I don't care. The best traders only hit 70%. So when somebody, oh, what about this stock? What about this stock? You were wrong. Well, are you looking at the whole work? Or are you cherry picking one stock that's down, even though like we made, what was it, in 2021 through 2022, $90,000 on a $100,000 investment. We made that much profit, 90% in a year. I don't hear anything. But if you pick a stock that's down, you pick a SOFI. I was in SOFI way back in the day, and we know it's down now. I got out of it a long time ago. But to cherry pick those things, it's just it's sad. It's absolutely sad. It shows you. Now, to make money, this is what I think, and I appreciate the shout out, Larry, about the bonds. I believe, and I've been calling it since middle of last year, that bonds are going to be your best play. And I remember Josh asking us on a live stream, Mo, when do you think the bonds are really going to start to gain a lot? And I said through March up through. And it has worked out exactly like that. And now, because of where we are now, it's a situation. I don't see the markets going up to 5,000 in the S&P 500. And I'll explain why. One, you can go out and get corporate bonds, single A, triple B, and you're going to get paid over 5%. And this is pretty much close as you're going to get to very low risk. And then you can go out and get a 6-month treasury, which pays you an annualized over 5%. Who in their right mind trading the S&P 500 at a forward PE of 19 roughly now, where you're getting a little over 5%, that's what you're kind of playing into for next year, who's going to run that up to 5,000? You understand how low that return would be, the estimate return would be based on pretty much no risk and very low risk? And I'll make it real easy. If I say I'll give you 5% here, no risk, or you can try to get 5.2 here and there's tons of risk, which one does the normal person with billions and trillions of dollars do? They're going to do the very low to no risk. And so every time, everybody keeps asking me, why do you keep saying 4,250 is the top range for the S&P 500? It's fundamentals. Josh is the man when it comes to technicals. I believe a good combination of technical trading with the fundamental trading will give you everything you need in your arsenal to crush this market. So keep in mind the fundamentals when we get to certain points. And that's where sometimes either one can betray you. But keeping that fundamental aside doesn't mean we can't go to 43, 4,400, but it's going to be temporary because they do not lie in the long run. And so my opinion is we have the debt ceiling issue. And after the Fed starts to cut, longer term treasuries and bonds are going to run. We're going to have a field day because once they start cutting rates, they start to go up. You can check back in 2011 data as well as the 2013 data. It's beautiful. And so history is on your side. I study it, and you can combine that with current fundamentals as well as the analytics, and you'll make bank. And so that's my opinion on things. I see a very bright future for the bonds, but I have to say, I still believe the worst of the market is going to come probably this fall, probably September-ish. We see the Fed's getting priced in there that they're going to cut rates then. Why? What does the bond market know? And I trust the bond market over anything else. What does the bond market know that the rest of the trading environment doesn't. Well, they've been spot on right now. I'm going to tell you this. For the last year, they've been spot on. So now I'm thinking about it. Ooh, well, there's probably going to be something bad happening in the stock market between now, May, to September for them to have that price, that rate cut priced in. I can't tell you the exact day. I think it's going to be closer to the middle of summer, but I'm preparing today.
Hey, I appreciate that. Mo, when you do see a comment, I want you to just cut in and just answer a comment. I want you to answer one of the comments too. Hey, I got to give a shout out to Stock Brava. It's not Stock Brava, it's Brava, VA, for that gracious and a, what did he say? From Stock Brother. One day I would be up there with you guys. It would be an honor to join the Core Four, maybe change the name to Fantastic Five, laugh out loud. Hey, appreciate you, Stock Brother, man. I sneak over there and listen. I just like to hear him talk, man. I sneak over there and listen to him talk every now and then. Hey, Josh, we're going to keep it bouncing. And then I want to answer even more questions. So we're going to keep these answers we're going to tighten up on the time a little bit. What do you think about crypto? We're just going to spend a few minutes on crypto.
Real quick, I just want to respond to what Mo said. Thank you, Mo, for your affirmation of my technicals. I also want to say that I show up here and I'm excited about these conversations with these guys because of what I can learn to grow my wealth. Each of us are bringing something unique into the pot. And trust me, I am coming listening as much as I am having something to share. Crypto. Yeah, I have some pretty specific thoughts on crypto. Here's what I'm going to say that's guiding me. There's going to be pullbacks, and those are going to largely be buying opportunities. The FUD is still out there where people are saying that that this is going to get back to the all-time lows, the 10K. It's still out there. People are really strong because a lot of people are wrong. They're hoping that it'll come back there, and then that way they can maybe redeem themselves. But we've got some major technical turns in Bitcoin and crypto as a whole that every single time we've seen those crossovers, it's continued in an upward trend. That does not mean it's shooting straight up. I actually get a pullback to that high 25, 26 range. It may not come back to me, but if it does, I'm going to buy, and I'm not going to be fearful that it's going to fall further down to 20K. No one, as Keenan says, no one's got a crystal ball. But I am looking for buying opportunities in crypto on the pullback. So that's what I see.
Josh, somebody said you might be friends with Nancy Pelosi because you're always right.
Not to Nancy.
I tell you, we're gonna get things wrong. But that's the what we could do is to just respond to them and to just give those updates. We're going to make bad calls. We're going to make bad technicals. But the thing that I am committing to, and I think that all of us are committing to, is coming out there and saying, guys, it has changed. The story, right. The technicals have changed. All of us have done that on these pages.
And that's such a good point, Josh, because people get married to one idea and they don't realize that the game is so dynamic. Like I tell people all the time, I would say if I had to pick a favorite stock in general, like, and not even just a stock, right? When you think about a stock, you're thinking about stock. Think about the company sometimes. I would say Apple. Apple is probably one of my favorite companies right now. But if we were living 20 years ago and you look at the top companies in the world, it was like Yahoo and like AOL, all these different kind of companies, right? But where are they now? They're not at the top anymore because things change. Like, for example, ChatGPT, right. that changed the game. That really changed the game for a lot of these traditional kind of companies. Like, for example, something like even Google, like a search engine where you're like, oh man, I wonder how to lose weight. You tell ChatGPT how much you weigh, what your height is, different kind of information about it, and it'll give you a whole workout plan. You be the judge whether you could do it or not, but it'll give you a whole workout plan. You ask it, oh man, I'm losing circulation in my toe. What's going on here? You just give it some information. It'll feed you information for you to probably tell your doctor, right? You always want to go follow up, but the game changes and you have to say, okay, how do we change with it? So for example, every single one of us right now, we're pretty bearish, I would say, overall. Like, it looks like the market's got more room to come down. But what if something happened tomorrow where they're giving more stimulus checks out? Like, that would change everything. That would literally change everything. And it's not that it would be good, but it would kick the can down the road and give us, you know what they say, you know what, the next presidency could deal with it. This one, we're giving you stimulus checks. You guys will deal with that in the future, but that would find its way, like it always does, somehow back into Wall Street's pockets, which would lead the market up when you get money printed out and pumped into the market, right? So things change over time, and you have to be ready for these dynamic changes. So now, with that being said, I did want to comment on something else, Bitcoin. I had mentioned Bitcoin in the video, I want to say last week, and I had said this. I said, Bitcoin is hard to say what it's worth because it has no intrinsic value. Some people took it as, what do you mean Bitcoin doesn't have any value? No. It doesn't have any intrinsic value. Things that have intrinsic value are things like food. You need food or you're going to eat. Water. You need water. You're going to, you know what I'm saying, be dehydrated and die. You need shelter. You need, safety. You need things like that. Things that are naturally giving you some type of value. So when you look at Apple as a company, let's say, for example, what are they doing? They're selling phones and computers for higher than whatever they purchased the materials for and labor. So then they're making money on that. Or Nike is the easiest one. We all know that Nike is selling shoes for $200, but it costs them a quarter to make. So, okay, they buy the materials for low, they sell it for high. That's value that you can track and you can understand. But Bitcoin, there's no company behind it but pulling in any revenue or of any sort. So
Larry, I need you to tag me. I need to come in on this one.
Come on in. Tag team, come on in.
Give me 1 second.
Okay.
So since it doesn't have any intrinsic value, all of its value is extrinsic. So people are saying, what do you mean it doesn't have any value? No. It has a lot of value. It's worth $29,000. That's what it's worth, but it's all extrinsic value. Now, when you want to think of use cases and things like that, maybe in the future, these things will give us some more intrinsic value, but as it currently stands, it's worth what people are willing to buy it for. Even something like Dogecoin. If I gave you $1 million in Dogecoin right now, are you going to fold your arms and say, that's not worth anything? No, you're going to take it and you're going to sell it because it does have value, but the value is external. Josh, tag in.
Well, yeah, I love this conversation. I watched the video that Keenan's referring to where he talked about Bitcoin's intrinsic value. And the following day, I did a video and I tagged and said, hey, I'm going to continue this conversation that Keenan had begun over on his page. I think this is a very important and relevant conversation. And I think that, yes, in a way, you could say that Bitcoin lacks intrinsic value, that if the need for it went away, there's not a tangible resellable value for it that could be applied to anything else. Now, for instance, paper money has no intrinsic value, only that comes by the value of America's government or its military.
Say that again.
But here is an intrinsic value that I do want to kind of shape or talk about when discussing Bitcoin, because I've been hearing that said a lot. People have come on my page and said, Josh, Bitcoin's got no intrinsic value. Now I get the conversation, but here is the potential intrinsic value. But I agree with the broader idea that Keenan's saying that if you aren't going to use it, it's got no intrinsic value. Gold has an intrinsic value. It's not backed or tied to anyone's word or to a government. It just stands on its own 2 feet. Throughout the history of mankind, people have wanted to use the yellow metal to make jewelry and watches, and there'll always be a need for it. But if people did not want to use Bitcoin, it would have no value at that point. But I do think that the conversation should be shaped this way. All of the miners that provide the transactions, solve the transactions, and have made the major infrastructure investment to be able to create the network of storage and transactions of information, and all the electrical power that has gone into that is essentially like the network that it's the store of value. So I want you to picture it like a giant warehouse. And I also made this reference to the cloud service. The cloud service is a warehouse somewhere in Arizona with, AWS cloud service, all these different Google's cloud service. They've got some massive warehouse with tons of machines, and nothing's being grown there. Nothing's being mined. just people have the ability to store information there. And there's a tremendous need for that. Those are multi-billion-dollar businesses. And I would just say that Bitcoin, the warehouse, is all the miners, all the electricity that's been spent to enable this store of value that can be used. And so I want that to be kind of out there as far as perception of the intrinsic value. The intrinsic value is in everything that's been built to enable it to be that store of value, very similar to cloud service.
Hey, Mo, can you do a station identification break? Because I see a problem. I see we got 1,200 people watching live and we got 445 likes. And then talk
hit
about
that like
links.
button.
Do what you
what
do,
is
Mo.
going
Do what you
on?
do, Mo.
Man, listen, when you guys get here, you want the algorithm to be our friend. I don't want to get slapped in the face by it. Hit the like button down below. We got 1,200 watching. We should be at 1,200 with a thumbs up. When you hit that, you're going to see a lot of people start showing up and we get this party started. And the
That's
other
right.
thing, you got some fantastic YouTubers here, right here, and they're doing the research. We're taking the test and we're getting 100, and then we're passing the answers over to you. So if you haven't done it yet, hit the subscribe button down below for Keenan's channel, Josh's channel, my channel. We know you're a part of Larry's channel. Hit the subscribe if you're not, though, and make sure you hit that bell for notifications and take advantage of Uncle Larry's course. He's teaching people how to invest. That link's down there below as well. And of course, when you come over, I know Keenan and myself both have Patreons. By all means, you see it in the screen behind me. Join the Patreon, see what we're buying and selling. And I know Keenan with his options, he has courses in there. The Discord is fantastic. Highly recommend it. Take advantage of all this.
Yes.
Hit the like button.
Thank you, sir. Thank you, sir. Hey, we almost are about to wrap it up. I'm going to try to keep this right at an hour. Hey, good people, we really appreciate you guys. Let me take a minute. I just wanted to get these guys in and just say this about intrinsic value. Okay, I'm taking the glasses out. That means let me slack my jacks a little bit.
Getting serious. He's getting serious.
Serious. This is. Somebody said I was quoting Taylor Swift like I'm 99 years old. I still go to concerts, okay? Like I'm still young, all right? But I'm not that young, but I'm young enough. Let me tell you something about intrinsic value. There are going to be people in your life when things are good and the bull market was going in 2020. When me and Mo started first. When we were hitting call after call after call after call after call after call, our pages was blowing up. Remember those days, Mo? And then, everybody, we were the best thing since sliced apple pie, right? But now that we're in a bear market, and not only are we in a bear market, Mo and myself said, hey, you got to change your strategy because now we're in a bear market. And these people are like, no, to the moon. You need somebody that's going to look you in the face and tell you the truth. Number one, I happen to know for the one that made the comment about the money, financial advisors, guess who they're watching? I can guarantee you, I've had over 6 conversations with financial advisors. And you know what? They're watching the channel because we have the freedom to do what they cannot do. Financial advisors are not stock pickers. They are literally fund managers, right? And if they can make you 5 to 7% annually, they're good. Now, this is no diss on them. This is what they do. And I believe that everybody needs financial advisors because just making money is not enough. You need to know how to manage it and how to make it last long. So what I'm saying is listen, before you research, I always say this, before you react in anything in life, before you react, always research. Now, intrinsic value, people that don't add value to you, cut them off because they have no intrinsic value, okay? If they're telling you this one is not good, that one's not good, ask yourself, what are you giving me that's good? All you doing is spouting off on everybody else. What value are you adding to me? If you make a page on YouTube and that's all you do is talk about other people, but you're not adding me any value, you're not making me any money, then ask yourself why. I'm telling you right now, The rubber hits the road now. All of these little kids that was Shiba Inu every day are gone. You know why? They don't know
Right.
how to navigate in a bear market. I do. Mo and myself, our first investment was in 1992. Yeah, now I know I said I was young, okay? I was 5, all right? I was 5 in 1992, all right? But I've seen these markets. I'm going to let you guys know, stocks with Josh and myself, we were trading together in 2008 during a recession. Is that not right, Josh?
That's right. That's right.
And so
Getting together at the coffee shop, talking stocks.
this is not our first rodeo, okay? And so you asked me what my credentials is? It's the School of Hard Knocks. I paid for my education in finances with stocks. How did I pay for it? With my losses. The lessons are in the losses.
Tuition.
The lessons are in the losses, not in the wins. So we are sharing with you. And while you're at work, we're doing this all day long. Like Mo says, I love it. He says, we're giving you the answers. We're taking the test and giving you the answers. So just remember that when you talk about intrinsic value. If you're around negative people, they have no intrinsic value to you. So
Right.
I want to say thank you to you guys. And I said this earlier on my page, and I'm going to kind of wrap up with this. I said this earlier in my page. Me and Mo, we're just under 600,000 subscribers. But the portion out of all of our pages that are still in, you guys that are still listening, you're going to do better than the people that have tapped out. They haven't unsubscribed. They're just waiting because the market is down and they're like, oh, I'm not making any money. So I'm not even going to watch, right? You know what's going to happen? This is what happens. You're supposed to be greedy when others are fearful, right?
Right.
Warren Buffett. You guys are learning more in a bear market. Guess what happens? The average recession lasts for about, the bottom lasts for about 11 days. Not 11 months, 11 days. So you will get in early. They're going to hear from a friend of a friend of a friend that the stock market is hot again and it's done ran up 30%, and then they will get in. So they'll be back. We haven't lost subscribers. They'll be back, right? You look at me, Kevin, 1.8 million. He's not getting 1.8 million views per video. They've all tapped out. Everybody has tapped out. But what happens is you guys that are still in getting these lessons and learning, listen, consume the free stuff. I encourage you, take Keenan Grace's stocks class. Learn how to chart from Josh. Learn about options and triple leverage and all of this stuff that Stock Mo is doing in his Discord. Learn about the overall market and learn about all these things with my class, right? But even if you don't spend a dime, concentrate on the free stuff. There's a ton of free stuff out there. But I guarantee you, those of you that are watching us right now, you will be way down the road of the ones that have tapped out. So think about that when it comes to intrinsic value in all walks of life.
Yeah.
The people that are negative, cut them off. They holding you back. You trying to walk and they grabbing and dragging their feet, holding you down. You know what? Just like in that movie, The Help. Ain't you tired? Ain't you tired? Ain't you tired? And you got to say ain't. Ain't you tired? Cut them loose. The
Cut 'em
problem is
loose.
some of y'all married to them. Some of them are your family members. Just cut them loose. You know what? I'm just telling you, this is life lessons, because if you change these 5 inches right here, it will change your future. I'm a witness. It had changed my future and my finances. And these gentlemen too. None of these gentlemen think about finances the way they used to, because I can guarantee you, if you took everything away from us, because of the skills we have gathered,
Yeah.
within a few years, we'll be back on top again, because we understand now that society don't want you to learn this stuff that we giving you guys for free. Society don't want it. They don't want you to learn it. And there's a reason why they don't want you to learn it. And we giving it to you for free. YouTube
right.
pays us. And that's why we do this. Because the truth be told, when we spend time doing this, we're not investing. And it's costing us. But I'm not leaving until we get to the mountaintop. All right? Closing remarks. We're going to start with you, Mr. Keenan Grace.
All right, so I got some closing remarks. I want to just chime in on this, right? Because I know sometimes when you say a buzzword, it goes over somebody's head. There's a thing called nuance. If you don't understand what that is, please Google it or go to your local chat GPT and ask it to explain it for a 5-year-old. So now, what I want you to understand is this. When I say that Bitcoin doesn't have any extrinsic value or intrinsic value, which Josh just gave us some understanding of, you know what? The potential is there for it to have that with the information. But you got to understand this. It still has a lot of extrinsic value. Still, meaning that the Bitcoin that I have 2 current full Bitcoin bought out, and I plan on holding it for years and years and years. Why? Because of all of the extrinsic value, because it's worth something and it can be worth more. I'm bullish on crypto overall long term because I see the potential. But when you understand, like I said, nuance between something that has intrinsic value and something that does not, then you say, yo, I can make money whether or not I got intrinsic value or extrinsic value. Like, for example, I want to use Mullen as an example since it kept coming up in this conversation. It was recently $4. It's now 6 cents. 6 cents. Mullen is 6 cents. Guess what? If I got in Mullen, I would know, oh, are they selling a lot of cars compared to whatever they make? Are they making money? Oh, no. Is there money to be made here? Absolutely. How? You realize that it doesn't have that intrinsic value, so it's not making any money. It's not generating any money, but it still has all of that good old extrinsic value, baby, meaning that you could still sell it for whatever somebody's willing to pay for it for. Now, remember, extrinsic value is not to be disregarded. It's to be used and to be understood. So you can say, yo, listen, I don't care about, let's call it Polygon token. I don't care about that. But I know that other people do. So if I had $1 million worth of it, I'm going to make $1 million off of it. You see what I'm saying? This is how you think like a business person. The last thing that I wanted to comment on was this, right? Because I got a funny comment. I found it funny. You might not. But it was about how Janet Yellen, the Treasury Secretary of the United States, was saying that we could run out of cash in by June 1st. So they're clearly going to raise the debt ceiling, right? They're going to raise the debt ceiling. And when you don't understand what that means, it means basically that they got a credit card limit. Let's say it was $1,000. And instead of paying it down, they just asked to get the credit card limit raised to $2,000. Hey, this is a party now. Somebody said, Keenan, do you think that Ukraine is going to send some of that money back because we need it?
Right.
No. I wouldn't be surprised to hear that the United States is still going to be sending money to other countries, even though they're telling us we don't have any money. Family, who is running the country, right? It's just crazy to me. But that's my closing remarks. I just wanted to say, don't count on it. Don't count on seeing that money again.
All right, Mo, let's hear what you got for it close.
Listen, family, we got a lot going on. You got the Fed stinking up the joint, like we said earlier, and we have the markets right now in a little bit of turmoil. We'll see where the direction goes. And for the bulls, there's still hope. If the debt ceiling can get taken care of rather quickly, or at least kick the can down the road, we could see a little short-term increase. But in the long run, I stay the course. I believe the recession is going to knock the socks off of this market. We're going to retest 3,600. And depending on how bad the recession is, remember, Elon Musk himself tweeted any further rate hikes before today even could lead to a massive recession. And we just had one. So even if you don't trust us you can at least go out there and look at one of the smartest minds out there in business and see why he's saying that. So there's a lot of things to prepare for. I love the bonds. Don't sleep on treasuries and bonds, my friend. If they're not a part of your portfolio, you should get out there and do your due diligence and maybe consider it. I appreciate you stopping by, and let's get out there and make some money.
Josh, what you got for us?
All right, man, I've got some thoughts. You know, I had a deep conversation with my son about an hour before I came on this live, and it was about being hungry. You know, I saw a comment, and I'm not talking about food. There's a lack of hunger for growth and hunger for change. People talking about they want this or they want that, but they're not really willing to get their metal tested. They're not really showing up. And I saw in the comments earlier, Ryan said, I just don't want to be a W-2 employee. And I believe in you, Ryan.
Josh.
Yeah.
I am that. He is part of my closing remark. It's odd that you say it, but go ahead. I'm sorry. Go ahead.
Let me just say this. You know, I believe in you, Ryan. And what I saw when I saw that remark was that Ryan's hungry. Okay, he's not satisfied with what he's got. There's something deeper going on in his belly that he feels that he needs to make some changes. I'm going to tell you guys what to do. You got to cut some costs. You got to cash up. You've got to tighten the belt. You're not going to get to where you need to go without some cash and without some money and without some resources. Cash opens the door for you to make progress. And a lot of you just spending it. And the reason why folks spend money idly is because they don't believe that if they were to use it to better themselves, that it could actually bring a real change in their lives. They think they're going to be in the same spot tomorrow. And I'm just going to end on this final thought. A lot of you guys might have heard this before about up goals and out goals. It's an old saying. You share your up goals with very few, but you can share your out goals with everybody. And if you don't know the difference, I'll give you an example. An out goal is something in your life you're trying to get rid of. Like you might say, hey, I weigh too much. I'm trying to lose some weight. All of your friends will agree with you. They'll say, oh yeah, man, you too heavy, you fat, you too thick. You need to lose some weight. That's an out goal. Okay.
There you go.
An up goal. Everybody will agree with you with your problems and your out goals. You know, I need to stop smoking. They're like, oh yeah, man, you're going to kill yourself with them cigarettes. But your up goal, people resist. You say, I'm going to go and I'm going to get a second job and I'm going to begin to cash up and I'm going to begin to invest in some my long-term portfolio. I'm going to take advantage of the full tax benefit of my Roth.
Come on,
people
man.
are going to tell you, you know what? It's the market's going to crash. There's no point in doing that. You know what? You're just going to burn yourself out. It's going to come at a cost to everything else. It's a season, and I just want to encourage those who are hungry. I'll tell you, I know me and Larry have been friends going on 30 years, and I can tell you one thing I know about that man. He's hungry.
That's it.
He is a hungry man.
That's it. I always
Come
say,
on now.
stay hungry and stay humble.
Take it over, Larry. Take it over.
Man, I appreciate, man. That sounds good, Josh. You could have kissed, man. I was going to raise your offering if you kept talking, man. I like that kind of talk. You know, I really do. I really like positive talk, man. You know, I always attend Invest Fest, and my guy, man, he's so inspirational. I just love it. Love to hear him. Was in jail, learned how to invest in jail. All right, Wall Street Trapper. Shout out to Wall Street Trapper, man. His story. People say, oh, but he cursed and he used to do drugs. And the man got locked up, spent time in prison, and learned how to trade in prison. So you know why? He was hungry. And you know, I always say this, never share a big dream with a small-minded person. Don't do it. That ties into what Josh said. Never, you can write that down, take that to the bank. Never share a big dream with a small-minded person. And in closing, Ryan, man, that touched me. And I had you loaded up and Josh brought you up. Ryan, do you have a Cash App? If you got a Cash App, Ryan, I want you to post your Cash App right now. And Stock Brother, I really appreciate what you did for me, brother. But Ryan, if you got a Cash App, I'm going to give you every dime of it. And there was another thing that came in today. Whatever came in today, I want to give it to you. And then I'm going to add to that, Ryan, because what I want to do is I want to make an example, gentlemen, out of one. Let's just we can't help everybody one at a time. But Ryan, I would like to sit down and see what your strong points are. This is why I do this. This is what brings me joy. And I want to try to refine, what do you do? I'm going to say this, and I know we're going off, but I guarantee you this is going to bless somebody. And this may be the bigger reason why we're going live tonight. There's been a lie that's been perpetuated throughout time. And that is, do what you're passionate about and you'll never work another day in your life. That is a lie. I'm telling you guys, that is not true. The keys to success is do what other people will pay you for and become passionate about that. Then you're on your way to not being a W-9 worker. I'm telling you, you could take that to the bank. It's real. And Ryan, I want you to find my email, go here. I want to contact with you. We want to make an example out of you. I do personally. I want to invest in you. I want to talk to you. I want to find out what your skills are. I want to help you and guide you in that area because you got what it takes to put that out. That touched my spirit when you did that. All right. Does he have one? I'm going to see. Right. I want you to reach out to me and I want to talk to you. Yep. Keenan Grace. Hey, I enjoyed you guys. I'm just seeing if he left a cash app. And if you don't, I want you to get one. I tell you what, if you don't have a cash app, get one and join us on our next live. But I want you to contact me until then. The man that's it. Hey, man, I appreciate you guys. All right. Hey, I love you guys. I'm trying to see. Hey, man, that is. I'm trying to see if he left one. I don't see one. Do you guys see one? Did he leave a cash app?
I didn't see one come through, Larry.
Okay. Well, we're going to leave it right there. Good people. And that's what we're going to do. We're going to pour in because that's what brings me joy. That's what brings these gentlemen joy. When we're not live and we're just talking amongst ourselves, that's what we talk about. How can we better serve you guys? I'm going to leave it right there, good people. Hey, I'm going to do one of Keenan Grace's deals. All right. I love it when Keenan Grace does this. Keenan Grace, I woke up at 3:00 in the morning laughing about this after our last live. Okay. All right. Y'all know how this go, right? All right, here we go. I got something really big to tell you. Josh, I got something real big, okay? Everybody lean in.
Larry,
listen. This is really big. Here we go. What I wanted to tell you was